Good morning, everybody. According
Morning,
to the
Todd.
official timekeeping system of the United States of America, it's exactly 10 o'clock Eastern time, 9 o'clock Central, 8 o'clock Mountain, and 7 o'clock Pacific. And if you're listening to us from the great states of Hawaii or Alaska, it's a little bit earlier there. Thanks so much, everybody, for joining us today. I'm your co-host, Mark Kiner. My other co-host has not made it to the studio yet. Studio meaning his basement at his house, Jim Blair. So hopefully he'll be here really soon. Keep my fingers crossed. This Social Security Open Forum is brought to you by the National Social Security Advisor Certificate Program. We offer training 3 ways: live in-person classes, live webinars, and taped on-demand videos. So before Jim gets here, I want to go over a couple of housekeeping things. Number one, as Chris was asking earlier, we do have our holiday special webinars coming up on December 18th, 8 to 4:30 Eastern time. And then another one on December 28th/29th, 10 to 2 Eastern time, both days. That's our second holiday special. And as you know, it is they do qualify for the NSSA certificate. After you pass our assessment, you'll earn the certificate, joining about 2,700 folks across the country that have earned our certificate so far. Also, I am certain that all of you received my newsletter over the weekend. I think I might have sent it out Saturday. I think I did, with the order forms for the National Underwriter Company's 2023 and 2024 Social Security Medicare Fax Book. You can purchase 2023 at a 50% discount. That's 50. And you can purchase the 2024 book at a 35% discount. I believe after the 35% discount, the tuition comes down to not tuition, but the cost of the book comes down to $188. If you send the order form directly back to me, you will save on the shipping, which is around $13 or so. If you order through the National Underwriter Company, then they will charge you the normal shipping cost of around $13. Okay, I'm trying to mute everybody here, so just give me a second to do that. We have a nice turnout. So usually we have a nice turnout when I send out an email to everybody a day or two beforehand. What happens many times is my newsletters go out to those people that did not open it up about 3 to 4 days later, and then they send me an email. They say they received this newsletter after the open forum happened. Well, that was the second time that the newsletter would have gone out. All right, folks, I can't stall for too much longer. So I'm definitely a little hesitant here because you all ask questions that I'm just not able to answer very well. So let's see how well we do. So as in the past, go ahead and except Teresa, because I already know I can't answer Teresa's question. Raise your hand and I will get Marcia. I'll get to you. And if I can't answer it, I'll just make up the answer. You'll never know. Okay, here we go. That's what Jim does. That's what he tells me he does. Anyway, we did record our 2024 on-demand videos a couple weeks ago. They'll be up on our website in a week or two. And the returning advisors purchased the 2024 at a deep discount of $450. And if you purchase the videos in 2023, you get even a better discount. So keep on the lookout for my newsletters with information about the discounts and the 2024 videos. That's really what I meant to say. Okay, keep my fingers crossed. Go for it, Marcia.
But I actually have a question about what our requirements are and how we find them. Like, are we to our, yeah, really, I have 2 technical questions, but I'll wait for Jim for those.
Okay.
But do we have every 2 years? I forget how and
Yeah.
when we have to recertify, and how do we remember that?
Good. I'm glad. That's a really nice softball question, Marcia. I appreciate that. Anyway, yes, the renewal is every 2 years. Renewal fee is $395 every 2 years, or $1,000 lifetime. And if you pay the lifetime, I will give you $100 Amazon gift card, reducing the actual cost to $900. You need 8 hours of CE, folks. You can get that 4 ways. If you teach your own Social Security workshops, I'll count 2 hours every renewal cycle, 2 hours. You could attend our open forums that good for 1 hour each. And of course, our monthly update webinars also qualify for 1 hour each. And I think we had one last week. I'm sure we did. Also, I know Teresa's shaking her head. Yes, because I know you were there. Also, I was going to say that you can also reattend a class, either live in-person class, a live webinar, or taped on-demand videos. And the tuition is $450 to do that. So you don't have to pay anything for the CE. Live update webinars qualify, they're free. And also our, our open forums qualify, and they're free. So technically you don't have to pay anything. Okay. Thank you, Marcia. I like that question. Okay, Glenn, I'm expecting you're going to give me a nice softball question also. If not, I'll boot you out of the program.
Hopefully. I don't know if you know anything about the Canadian system.
We'll hold off on that. Thank you, Glenn.
Okay.
I appreciate the softball question for Jim. No doubt it, totalization agreements come into play. So anyway, Jim will give you more of an update there. Okay. John, let's go to John. Your hand is up, John. What's going on?
Yeah, just got to get it off mute. So
okay.
Let's see if this is going to work. It's I've got a gentleman who's 73 years old, has been taking Social Security at least for 3 years, and all of a sudden he finds out that he's not having Social Security paid to him. He makes a decent amount of money, so he doesn't always check his balance. And so he was at the hospital, and he's a past doctor, and somebody said, "Oh, you don't have Medicare anymore." He goes, "What are you talking about?" And so sure enough, Social Security stopped paying him his income, and so that stopped paying for Part B. Mm-hmm. So he lost his Medicare, and so he calls up, and basically they're resolving it, but they're saying something about his incarceration, which is farthest from the truth. And I'm like, has he just been fraudulently taken advantage of now? So we're trying to get him back to Part B because he has nothing right now, and we don't know what to do. We have gone to his representative. He's talked to Social Security, he's talked to Medicare, and it's just taking forever to get him. So he has nothing to get him back on to Part B.
Oh, and okay, hold off, John. Your question is way beyond my knowledge base. When you talk about incarceration, I know. But anyway, guess what? Jim Blair's with us now.
Yay.
Hey, Jim, are you there? There he goes, connecting. Hey, Jim.
Howdy.
Nice to see you.
Yeah.
Okay, so I really haven't had the opportunity to answer too many questions unless they were really simple. So anyway, John, let's go back to John. John, repeat your question to Jim, and we'll get to you, Teresa, and everyone else.
Okay, probably not going to sound the same because it's a lot here. So I have a 73-year-old. He has been he's been on Medicare since 2015. In March of this year, let's see, reinstated. He had lost his Social Security, stopped in March for some unknown reason. It was reinstated, and he got a check minus his Medicare premiums. Now, this guy doesn't make over $500,000, but it looked like they were taking $560 a month from him. He was in, I think, the second or third category because he didn't make more money. He's a doctor. So we're trying to find out why he lost his Social Security and how to get it back, because he has nothing right now. I went on to his Medicare.gov, and he only has Part A, not B. and we can't sign him up for a Part D. So we're in a conundrum here, waiting for Social Security, Medicare, and he has gone to his local representative a couple weeks ago, and they're trying to work on it. So he's stuck. And when they were talking about, and I want to say it was his representative said, well, we're going to help you here, but we still need to work out this incarceration issue. He's never been incarcerated. And all I could think of is somebody's got his ID. So what would you suggest we do?
Yeah, that's it sounds like he's done what he needs to do. They just need to get this corrected, but they're going to have to do that through the local office, get all that corrected. He'll need to let them know if there's something on his record showing that he was incarcerated, that needs to be corrected. There might have been some identity theft or something involved there. So if he hasn't spoken to someone in management, I guess I would go in and ask to speak to a supervisor and see if they can get this straightened out for him as soon as possible. The congressman's office needs to be working on it as well. Make sure they know about the incarceration issue, that they say that there's an issue and he's never been in jail. So, but unfortunately, there's nothing more than he can do except contacting the office and his representative.
Hey, Jim, can I ask a question sort of in relation to this? Because he brought up the Medicare Part B means testing IRMA premium. And so my only suspect question or follow-up would be, did you do any type of Roth conversions in the past that maybe they're looking back at 2 years of income? Because he is a doctor. You weren't on the call when he mentioned that, but the guy is a high income earner. Well,
yeah, they are looking at, right now, they're looking at 2021 income. Next month, it'll be 2022. And so you might want to look at his tax returns for those years, or if nothing else, provide him to Social Security to show them that he's not at that high limit if he's not.
Well, he's been under like 97,000 for the last at least 5 to 10 years. He said when he retired, or when he was 65, yes, he had some high income, but he's 3. So I know for the last 5 years, at least past the 2, he says, I haven't made over 97,000 for a while as in retirement.
Yeah. So I guess he's single. Is that
single? Yes.
Yeah. So, yeah, he should take his tax returns in, to prove his income and ask them to provide to him what they have on record.
Will they refund him?
Yeah, if they're holding back more money than they should, he will be due a refund, and he'll get that. It's just a matter of getting it processed.
Okay, and he did get a check back from. How did this work? He got a check back to get reinstated, but they still won't give him Part B. And I think that's because of the incarceration issue. I'm assuming you can't have Social Security funds when you're incarcerated.
Well, right, you're not. You don't get paid your Social Security benefit while in jail. So they think he was incarcerated for some reason. Yeah. It's more than likely somebody transposed a number when they input someone else, but technically there still could potentially be identity theft. So he definitely needs to keep working with the folks in the local office and keeping his representative informed in what they tell him.
So one of the other things is he goes, I need insurance. I need medication insurance. I said, well, maybe we can put him on, we're in California, so maybe we can put him on Covered California as a 73-year-old, pay full price to at least cover him until this thing gets resolved.
John, we need to kind of move on a little bit. So this is kind of your last question, okay?
Okay.
No, go ahead. You finish your thought on this, but go ahead.
Yeah, if he goes on to Covered California, it's going to be over $1,000 a month for him. And if that's the case, when it gets resolved, will he get his money back?
They won't refund that. So that's why he needs to just become a little bit of a pest and show up at his local office till they get it resolved.
Okay. Well, thank you, and I
Okay.
appreciate.
Thank you, John. I'm going to go to Teresa. Teresa, because you were there, I wanted to ask a question earlier to Jim. Go for it.
Jim, I wanted to verify a question that was asked of me at a seminar that I was hosting. And a person asked me if their Medigap or their supplemental insurance coverage could be paid for by a credit card as opposed to coming directly out of their bank or from their Social Security payment.
Yeah, the supplement isn't through the Social Security. That's
Sure.
through
I
private
think it
insurance
depends on the
companies.
carriers. Some carriers will allow it and some carriers will not. So it depends on who the Medigap is through on whether or not they will allow that or not.
Well, my husband's supplemental is coming right out of his Social Security check through
Really? I wasn't aware of.
AHN, yeah. But this person wanted to know if they could pay for it by credit card because they wanted to get the points on their card.
Oh, yeah, that's, I mean, if it's something that comes right out of your check, then no, they won't. It'll just continue to come out of the Social Security check. If it's some
Okay.
other kind of direct pay, like through their bank account, then check with the insurance company and see if that can come out of the credit card instead of the bank account.
So a Medigap would not be. That would come right out of the Social Security payment.
So can I jump in here? Because I do a lot of Social Security. So a Medigap is a contract that the client has with the insurance company that can come out of a bank account, or some allow credit card. It cannot come out of Social Security. The only thing that can come out of Social Security check
It's Part B.
is your drug plan. And if you're on a Medicare Advantage plan that has a premium. Does that make sense?
Yeah, so that means the Medigap can be paid for by a credit card then.
You would think.
Company allows.
Yeah,
Check-
every company's
Check
different.
with them.
Well,
Yeah,
That's-
but the client has to pay the client has to pay the Medigap policy out of their account, not Social Security.
okay.
Okay,
In other words, directly.
right, because Medicare Advantage plans, which is a Medicare replacement, and the drug plan, those are plans that go through through Medicare, I guess. And that's why those can come out of Social Security directly.
Yeah, that makes sense.
Teresa, did we answer your question?
I believe so. Yes. Thank
Okay.
you.
Thank you. Thank you. And thank you, Michael. Let's go to Glenn. Hi, Glenn.
Okay.
Go
so
for
I
it.
actually came up with another one now. This one's, I think, easy, but lady came in, was divorced. She wanted to collect on her ex-spouse's Social Security and let hers grow. She actually got that answer from Social Security, she said. She called them and they told her she could. That is incorrect.
When was she born?
She's not old enough.
Okay, well,
So that
yeah, it's unfortunate they
maybe-
give her that advice. It just
He was
is.
adamant that they told her that, and I said, that is not correct. Now, if he died, if you had a deceased husband, but anyways, the other question I had for you, Jim, got a client that has a Canadian retirement, and we were just wondering if for our planning sake, if he dies, does the spouse get part of that, or is it still the same rules as if it's, the higher one, those kind of things?
Well, if she's eligible for a survivor benefit from the Canadian pension, she can get that and his Social Security.
So she'll be able to collect on both.
Right, because he can collect on both. He's just subject to windfall. But if he passes away, windfall no longer applies, and she'll get his full Social Security.
Okay, he's quite a bit older than her, so that's, that would be nice. Not that he would wish him to die, but it's a nice benefit then.
Yeah, that's just like a private pension, so it's not going to affect her Social Security.
Okay, super.
Thank you, Glenn. Let's go to Amy. Hello, Amy.
Hi there. I have a question. There's two parts to the question. Okay. Widow, age 63. Husband passed away 2 months ago. He was 73. So she's going to collect spousal benefit of $2,400 a month. Her full retirement age is until age 67 plus. Can she collect both the spousal benefit and then take hers?
Not at the same time, but she can take the survivor benefit now and her own later, full retirement age or even age 70, if it would be higher than the 2,400.
It isn't. So
okay.
she wouldn't. Hers is only hers would only be about 900. So the 2,400 is what she should take now and just keep taking it.
Yeah, I mean, technically she could take her 900 until full retirement age and get the survivor benefit unreduced, but that's quite a bit of difference.
Yeah, it doesn't look
to make
like
up. So yeah, probably she'll take the survivor now and just stick with that.
Okay. And then the second part of the question, she told me that in order to get that 2,400, she can't make more than 21,000 a year. Is that true?
Well, she is subject to the earnings test because she's under full retirement age. So it's this year it's 21,240. Next year it's what, 22,320 or something like that. Don't quote me exactly, but it's close. But yeah, if she goes over that, then they will hold back $1 benefits for every $2 she goes over.
Hold $1 for every $2. Okay.
Right. Over the 22,320.
Okay.
And one comment, Amy, full retirement age will not exceed age 67.
Yeah, that was, she told me that she was gonna, she told me that, and I questioned that because I thought 67 was it.
Yeah, that's it for today at least. Yes.
Oh, okay. So after 67, it doesn't matter what she makes, but up until 67, she's got to stay under this threshold.
Right. Now, the year she reaches full retirement age, the amount she's allowed to earn goes up to $59,520. But up until that point, it's the 22,000.
Okay. And after full retirement age, it's what did you say?
No limit.
No limit. Okay.
Yeah. The month that you attain full retirement age, earnings test goes away. The month, not the day, but the month.
Okay. Got it. Thank
Jim,
you.
Jim, I'm gonna have to rename this get together. Open forum, not really. Questions for Jim.
There
you go.
Or Michael, he was helping, and somebody else helped before too. So
questions for the group. Okay, let's go to Brendan. Hi, Brendan.
Hey guys, real quick, I think this is along the same lines of like the earnings test, but what comes into disability. So I have an advisor, they have a client. So basically they're husband and wife, they started drawing at 62. Wife is now 64 and just got diagnosed with MS. Her FRA is 66 in 10 months. The husband's going to reach his FRA in 6 months. Last year they had income above that, so they had to pay back a bunch of money because obviously they made more money than the 19,560. What they're wondering is if they file like a claim on the disability insurance, is that and that's part of it. Is that going to account for earnings, as well as would it make sense for her to switch to a disability benefit as opposed to her own benefit?
The advantage of the disability is it would change the reduction factor. So you said she's about 64 now, and
she's 64. Her FRA is 66 in 10 months.
Okay, so roughly 3 years of reduction factors would be wiped out, and she would see an increase in her benefit. So what would happen is her disability normally isn't reduced for age, but it would be reduced for however many months she drew a retirement check.
Gotcha. Okay.
But she'll get more money. Now, as far as the earnings test is concerned, That does not apply to disability. So if she's not working, it's not an issue anyway. Doesn't matter what he earns, she'll still draw her benefit.
Gotcha. So the disability insurance won't affect her benefit. Will it affect his? He's hitting FRA in 6 months, so he'd have that 59,000 or whatever.
Yeah, and it's not
right?
going to affect his benefit anyway.
Okay, so that answered my second question on somebody was 70 and looking to draw an annuity that are on disability. So the earnings test isn't going to matter on the disability portion of Social Security.
Right. Well, actually, an annuity isn't going to affect the disability anyway.
Okay. And then the other question, Mark, I'll take it offline. It was about my CE. I just want to make sure you got my form, but that's all I had. Thank you, guys.
Thank you. Well, Brandon, send me an email if you want to verify
Sure.
that I received. Okay, that's fine. Thank you. Marcia, you're on.
All right, thank you. Mark, I'll have a question for you at the end, but 2 questions for Jim. Jim, to my email that I sent last week about this confirmation on widows benefits. I have a confirmation here and it's confusing. And so my client was asking, well, what did I apply for? Now she knows she's getting widow benefits. The math works. But the letter says, I apply for all insurance benefits for which I'm eligible under Title II of Social Security. And then the letter goes on to say, I want my benefits beginning with the earliest possible month based on my earnings. And the next sentence is, I do not want this application to be considered an application for retirement benefits on my own earnings record. So the big concern here is she getting widow's benefits, and at 70, is she going to run into trouble going back to the SSA?
No, she's drawn the widow's benefit. Technically, what she filed was a restricted application for widow's benefits. Now, it's
Okay.
still valid. When we talk about the restricted application and that magic birthday and it being gone, that doesn't apply here with the
Okay.
widow's benefit. So what she did was she applied for the survivor benefit only. And that's what that's saying. I'm not applying for retirement. I'm applying for widow's benefits. And that's
Okay.
how they're paying her. So that account still sits there. So when she reaches 70, she will go in and say, okay, now I'm ready to apply on my own. And they'll take a new application for retirement benefits with her delayed retirement credits.
Okay.
The
It's
other
just
is
so
I want benefits.
convoluted.
Yeah, it's a little confusing. And saying I want benefits with the earliest possible month, that just means you want your benefits to begin as soon as possible. So month of filing usually.
For the widow's benefits?
Well, right. And that's
Okay.
for that benefit.
Okay. All right. Thank you. I just
Anything
wanted to
on
make-
that application is for the widow's benefit.
Okay.
Hey,
Only
Jim,
widows,
is
that's-
that, sorry to butt in, but is that the one you were talking about last time where you got to be careful not to check the box where you're applying for both? Because you'll just get the one anyway?
Right. You want to make sure they understand that this is an application for whichever one you're filing for, either the retirement or the widow's or survivor benefit, whichever you're applying for. You want to make sure they understand that. So yes.
The second question is a deadline question. I got an email from a client saying, hey, I put in my IRMA appeal, my SSA 44, and my local office told me it's too late to appeal for 2023 payments. Is there some deadline on the SSA 44 that's not listed on the form itself?
Not that I've ever seen.
Okay. Thank you. And Mark, for you, I wanted to know, since I end up, and I think a lot of us do, with a lot of process questions. Like we get the technical rules, but the process is so challenging. And every office seems to give a different answer. So is the book, your wonderful book, does it cover a lot of these process kinds of questions?
I do not know. I don't know everything that's in the book. So,
No,
you know, when I
I didn't know
look,
if it's just a technical questions.
yeah, I'll look at the book. I don't know for sure if
Okay.
it covers the process. Send me an email, Marcia. You know,
Okay, I will.
we're involved
All
with the case studies. We're not the main editors of the book. So there's a lot,
Oh,
there's
okay.
95% of the book, you know, a lot of information is there. So yeah, Yeah, Jim
All right.
does case studies. I do some questions, but I can't really say exactly what's in the book. All I can really
Thank
say
you.
it's an excellent resource for advisors at a 35% discount. All right. Thanks, Marcia. Let's go to Michael again. Hi, Michael.
Hey guys, this may be a piggyback to Marcia actually. I'm trying to figure out because I've heard different things, but just clarification, how this would affect either taxes on Social Security or IRMA, as far as when a client is either withdrawing funds from a qualified account or receiving an income from a qualified account like an annuity. Do you know how that affects things
What things?
like Social Security taxes on Social Security?
Well,
Because it's not
yeah.
earned income, but
Yeah, but AGI includes all income. So whatever is included in AGI will impact Social Security benefit taxation. And plus, you need to add back a whole bunch of other stuff like income from Puerto Rico,
Right.
municipal bond interest income. So if it's included in AGI, it's going to impact the taxation of benefits.
Okay. All right. Thanks.
Okay.
I just have a quick question on that. On the
Okay.
in that vein, so I understand it does affect taxation, but the annuity income does not affect their Social Security disability. It won't make them lose their benefit. So it affects their taxes, but won't make them lose their benefit. Correct?
That's correct. Yeah, the only thing that would cause them to lose their disability is that they go to work and have wages, or if they're self-employed, and then based on that income. But other sources of income like your IRAs or 401ks have no effect.
Great.
John, you're next.
Hi, I guess that's a related question to distribution. I've got a client, her IRMA was affected from the annuity distribution in 2021. They're going to raise her IRMA to a higher amount next year. Is there anything we can do? Because it was just a one-time distribution to address like a housing concern that she had.
Well, 2021 income will impact the 2023 IRMA surcharge.
It was for 2022.
Okay, fine. So was there a life-changing event?
Yeah,
Death?
she retired.
Okay. And did her income go down in 2023 or will it go down in 2024?
It has been down since 2021.
When was her income elevated?
2022 from the distribution.
Yeah. So I don't care about 2021. Her income was elevated in 2022. So the question is, will income be down in 2023 or 2024?
Correct. Yes.
Okay. So complete the form SSA-44, life-changing event appeal for IRMA surcharge.
Okay. Yeah. So we're doing that. So the only thing justification would be lower income. That's the only thing that's the only play we've got.
Well, the justification is retirement,
Okay.
which results in lower income.
Gotcha. And then the second question was, does index factors change every year or is it fixed?
No, it changed based on average wages. So the indexing factors that were used in my case were set in 2018. Indexing factors for folks turning 62 in 2024 have already been set. So it's the year you turn age 62, and they change each year.
Okay, and then we have access to all those index factors?
You go to SSA.gov and type in indexing factors. You can even go to Google and type in indexing factors. You just have to let them know what year you're looking for the indexing factors. But believe me, they're there. They go back how many years, Jim? What, back to 1935?
Well, this current computation is 1978.
Okay.
Okay. Thank you.
Thank you.
Now,
go ahead.
Eli sent me or on the chat thing sent a link to Palms on Irma request for reconsideration, and it says in there that you have 60 days from the date of your notice to file the appeal.
Yeah, the letter was dated November 22nd.
So they would have 60 days. Well, technically 65 days. They give you 5 days mail time. But so if you want to file an appeal on your Irma, you have 60 days from the day the letter is received to file the reconsideration.
Yeah, that's what I'm doing. I just wanted to make sure that if there was any other plays besides that income drop, basically. But thank you.
Okay. Let's go to Jeff. Jeffrey, you're next.
Hi, thanks, Mark. A different kind of question. I remember last year that we were talking about the COLA increase and said, oh, this is the first one in a while and it's pretty big and we don't expect another one to be coming and for a while. And then this year it seems like they're doing it again. Is there any insight? Is it just increase of inflation or anything else that's going on policy-wise that you can...
Well, Jeffrey, we would never have said we don't expect any more COLA adjustments. What we probably said.
You said, most probably we won't see it since we didn't,
Okay, fair enough. Okay, yeah.
Okay.
So each year.
What we're trying to say is we want to see one as high as 8.7.
Yeah.
There's only been 3 years without a cost of living adjustment.
Oh, okay.
Since 1975.
Yeah.
Got it. Okay. Yeah. I misunderstood.
No problem. Yeah, 8.7% 2 years ago for this year and 3.2% for next year. Okay, thanks, Jeff. Anything else on your mind there?
Nope.
Okay, got it. Now I owe a gift card, I know, to Elisa. So Elisa, from last time when Jim did it, I owe you a gift card, so I'll get that to you. Jim, let's talk about that restricted application. Anything going on there?
Nothing. Anybody that was eligible for it is now age 70. So they would have filed on their own. Technically, yeah, we have the 6 months retro somebody could apply for. But anybody, if you were born 1/1/54, you're attaining age 70 December 31st. And so that means you're 70 in December. And effective this month, they're on their own. At least they should be.
Yeah. Well, there's always the strategy. It's really not going to come up, but it might, that if you're meeting with somebody who's 70 in December and they still have an opportunity to file a restricted app effective 6 months ago, they can do that as long as the spouse is receiving a benefit. So let's assume it's the husband that goes back 6 months, files the restricted app instead of taking his own benefits at age 70. When he gets a nice lump sum check, he'll go ahead and file for his own benefits effective in December. And of course, you've got 6 months to do that, and you can always go back 6 months. So there's still a strategy out there. There is. Will it happen, Jim?
Not likely.
Not likely. Have you folks done any restricted applications over or met with somebody who's able to do a restricted app over the last few months? I didn't think so. Eli, before we get to you, somebody did ask a question in the chat that we should go ahead and read it off. They asked it early on. Here we go, Jim. From Stephen. I do not have a microphone on my computer and have a question. Here we go. Here's the question. I have a client whom Social Security did not count a W-2 on her 2022 income. What is the best way to go about correcting the situation?
I assume that means that it wasn't posted to her record. I hope it doesn't mean she walked in the office and they said no, but if it's not posted to her record, she can take her W-2 into the local office, show them the W-2, and they can add it in right there in the local office. Technically, she could mail it in, but who knows when it would get done then. But provide them a copy of the W-2, and this is one item that you can provide a photocopy of, and they will post it to the record.
Okay, Eli, you're on.
Thank you, Mark. Thank you, Jim. I just wanted to give a quick update because I was in touch with my former manager at my office and some of the employees there recently. Just to give everyone an update, Social Security is still behind in training a lot of their personnel. So when you're dealing with your clients, and I've heard some complicated issues coming up, the key is follow-up. Unfortunately, the only way that things are going to get done right now is helping your client get in constant contact with Social Security. It might take multiple visits, and it might take a period of time, but just be aware when your clients are coming in, excuse me, with issues, that they are really backlogged in getting people trained. And so therefore, the people that are trained are buried with work. So I just want to give everybody a heads up that that's still probably another 1.5 to 2 years before it starts to get a good flow through with Social Security. So just want to give everybody a heads up with that.
Thanks, Eli. And I have to say, everyone at SSA should be taking our course. This way they understand the rules and the laws. They may not, to complement their understanding in other areas. Thank you, Eli.
Now, Eli, I let the folks at the Springfield office, Springfield, Ohio office know this the other day. The other day it was the customer's wrong day. And so I let the manager, actually assistant manager at Springfield, know that it's customer's wrong day, let the employees know, and then that just turned them loose on the public. But yeah. So hopefully nobody went in that day because they were going to be told, nope, sorry, you're wrong. But at least the customer gets 1 day, or they get 1 day out of it.
Yeah.
Now, before I get to a question that Eric just sent to me, there was a question I had a week ago from one of our advisors, and this was it. Let's see, a lady turned on her, a wife turned her benefits on back in March of this year. Her husband recently passed away, and her question was, can she stop her own benefits, claim a widow benefit, and then switch back to her benefits at age 70? And the official answer to that question is no. You cannot stop your own retirement benefits and begin a widower benefit and then switch to your own again at age 70, expecting to get those DRCs. However, though, I did bring up another idea. The do-over is available, so because it's been within 12 months. So she can go ahead and utilize the do-over, pay her own retirement benefits back, and then collect the surviving spouse benefit for as long as all the way up through age 70, and at that point she would turn her own benefits on. So that's kind of a workaround, something to consider. Jim, what would you think of that idea?
I mean, that's a possibility. As long as you're within that 12 months, you can withdraw and pay the money back. But what you would want to look at is how good of a deal that's going to be for you. You're paying back a lot of money. How much more are you going to receive by going through all of that? Because that could be a considerable amount of money depending on your monthly benefit amount and how long you've been receiving it. If you received it 1 or 2 months, it may not be too bad. If you've been getting it for 10 months, that could be pretty expensive. So you would have to definitely look at how much am I paying back versus the lower amount I'm going to get going forward to get how much at age 70 and look at your break-even point.
And then there was another question, which I had it on the tip of my mind, and now I kind of forgot what it was. Oh yeah, Jim, surviving spouse benefits. When is the surviving spouse benefit going to be automatic versus not?
Well, the survivor benefit is automatic if you're on the person's work record as a spouse and you're past full retirement age and that person passes away, they will convert that individual to the survivor benefit. Because there's no reason to wait. They're already at the point where they're going to receive the maximum amount. If they're under full retirement age, then Social Security is going to send them a form. I don't, you can let me know if I'm wrong, Eli, but I believe it's 4411 or 1144. But basically it's a form that says you're willing to take the survivor benefit at a reduced rate because you're under full retirement age, it'll be reduced for age. And then if you say yes to that, then they'll start paying you. And if you say no, then you wait till your full retirement age and get 100% of the benefit. But it's automatic if you're past full retirement age and already on that individual's work record.
So if you're under full retirement age and you're receiving a spousal benefit, they're not going to force you to take a reduced surviving spouse benefit. They will give you the option to wait until a later date, right, Jim?
That's correct.
Thank you. And when I responded to this advisor, I really wasn't thinking that. So I responded again and told him that you wanted to clarify some items. Okay.
Now, Marcia wanted to know if I could provide that link that Eli sent me. If you're willing just to write down a Palms reference, I can give that to you. If you want the link, I guess it'd probably be easier for you to send me an email. The Palms section, it's under HI. It's 01140.001, and then it's under B. When and who can file an appeal for request. Now, technically, that's the disability section, but it's going to be stuff like that's going to be the same whether it's disability or your retirement section. So, but if you want the link he sent me, send me an email and I can send that to you.
Hi, Jim. I just want to let you know, I just posted a link for everyone. So
okay.
They can pull it. Thanks, Jim.
Sure.
Okay, there's a question here from Eric. Here we go. And then we're going to draw some gift cards. Okay, names for gift cards. The client age 70 just claimed Social Security. Wife is claiming a spousal benefit now at age 67. They have been married, filing joint over 40 years. SSA office told them they need to provide proof of marriage more than 10 years. Is that normal? So, Jim, what do you think?
They're married?
Yeah, I guess so. That's what they said. They've been filing jointly for 40 years. So yeah, they must be currently married.
I mean, they proof of marriage maybe, but not for 10 years. I don't know why only if that's a divorce case do you have to worry about the 10-year rule.
So I guess what you're saying, Jim, that's not normal.
No, unless we're missing something that's not normal.
Okay, Eric, if there's more information you want to provide, go for it. All right, Jim, 2 numbers between 1 and 44. I'm going to have to do a lot of counting here. I can see that.
Yeah.
Geez.
Let's pick 17 and 38.
Ah, geez, Jim. Make
Sorry.
me count. All right, let me get it done. Okay, Kate. Eric, is that? I can't really pronounce your name. Kate, send me an email as a reminder. You too, Lisa, send me an email as a reminder so I can send that directly to my son Aaron to send you the gift cards. Okay, so that was 17. Randy, I don't know if I lost count, folks. Jim, next time, don't give me such high numbers. Otherwise, I'm going to have to count backwards. Anyway, Randy, I don't know your last name. Who are you? Randy, send me an email. I really don't know who you are. Send me an email and I'll send you the $50 Amazon gift card. Okay, great. So it's Kate, it's Randy, and it's Lisa that I need to get emails from. Okay, great. So, Jim, what other types of questions have you been receiving lately?
Hard to come up with something. Let me take a look here.
How about your phone call today? What was that like?
Oh, well, if you want to know about my call with Spectrum, I can tell you all
Oh,
about
no,
it.
never mind.
All right.
As you do that, George has a question. Let's go to George.
All right.
Hi, good morning. A couple of questions. Just wanted to be sure I'm understanding correctly. A couple individuals that are receiving a disability benefit, And the question is, what's the limit that I can earn before they figure, okay, you're fine, then we'll take away the disability? Is it that 1470 a month? Is that, am I reading that correctly for a disability benefit?
Well, technically that is SGA, although it's going up next month. But right now 1470 is SGA. And so if you earn over that, then they're definitely going to look into it. Now, I think it's 1,050 is the trial work period number. And so if you earn over 1,050, that counts as one of your 9 months of your trial work period. And once that is over, whether you're at SGA or not, they can still, I mean, if you're working, it could give them cause to go ahead and look at the disability and do a review. You know, if it's under SGA, usually you're okay, but it's technically you're not supposed to be working. They do give you the opportunity to try to return to work. That's what the trial work period is. But even if you're doing a volunteer job, technically speaking, they can look at that and say, okay, what you're doing there also relates to you could work somewhere and earn that 1470 a month or more. So, you know, there's not really a number that you can give someone. If they're under the 1,050, probably they're okay, but there's never any guarantee.
Okay, and I have a follow-up, a second question. As far as the surviving spouse benefit, just to make sure I understand it correctly, if they're receiving it before their full retirement age and they get a reduced amount, but they get that reduced amount on top of the benefit that they're getting? Let's say they started their benefits early.
No, if you're receiving your own and then you become a surviving spouse, and that benefit would be higher, what they'll do is just pay you an amount. They'll pay you your own, but they'll pay you an amount from the survivor benefit to equal 100% of that benefit. And then, of course, if they're under full retirement age, it's still reduced for age. But I mean, you're only receiving one benefit, or at least the total amount of one benefit.
Up to like the full retirement age of the other person plus their own benefit, but it only equals one. It only equals the full retirement age of the other person.
Right. If they're getting 1,000 on their own and their spouse dies and they could get 2,000 from their spouse, they'll get an extra $1,000 on top of that to equal the 2,000. But they're not going to get the 2,000 from the spouse plus 1,000 on their own.
Kind of like they're just getting the spouse's benefit. Okay,
right.
If it's higher.
Yeah, it's just the way it's paid.
Got it. All right. Thank you.
Before I go to Susan, I want to say Elisa did receive her gift card from last time, but Paul, you also want a gift card. Did I send that to you?
Negative.
Okay, you're the guy. You'll get a $50 gift card.
And you're going to use that as a Christmas present excuse.
No, you have to send half of that to Lisa because she told me she already received hers. So.
Oh, okay.
Okay.
Thanks, Santa.
I'll take care of it. Susan, hi, Susan. You have a question you'd like to ask?
Good morning. Yes. Jim, when it comes to GPO and WEP, is the impact on the Social Security benefit only when the state pension or local pension is actually received, or is it when you're also eligible? So you're not receiving it for whatever reason, but you could.
Well, yeah, it's based on basically when you receive it. Now, there are situations where you may not be receiving it, and that's if you roll it over into an IRA or 401k, and now you have, it's up to you how much you want to take out, when you want to take it out. That's effective immediately when it's rolled over and when you're eligible for Social Security. But if you're eligible for it and say you're still working, then it's not going to apply until you retire and start to draw it.
Okay, thank you.
So it'll be based on when you receive it in that situation.
Thank you.
Okay.
Mark?
Other? Yes.
Mark,
Yeah.
Yeah, Richard, I apologize. I don't know how to raise my hand. So, but real quick, like, so, my wife went back, my wife is she retired at full retirement age. She was a breadwinner, so she had a higher income. In 2022, she went back to work. We filed a return, of course, by April 2023. When will that 2022 dollar amount appear on her statement? Because she had a lot of 0 years. So she's going to start replacing 0 years. She's 75 right now, but she'll continue replacing 0 years from now on. So when will that actually be shown on her Social Security statement, Jim?
Yeah, when did you file your taxes?
For 2022, we filed them by April of this year, 2023.
Yeah, that, I mean,
But
they've pretty
I'm not
much,
sure if,
go ahead.
yeah, I'm not sure if it goes directly to Social Security or if it goes to IRS and IRS gets it to Social Security. That's where I'm a little confused.
Yeah, I mean, they'll have to wait till they get the info from IRS, particularly in the self-employed cases. But if it's a W-2, that gets posted pretty quickly. But they just recently processed in October the 2022 wages to affect the benefit effective January 2023. If she hasn't seen an increase yet, she might want to contact the local office, provide her tax information, the W-2, if she has a W-2, and ask them to recompute it.
Yeah.
But it's usually
Right.
around October
Okay.
when that happens.
Okay, so what you're saying, it should have been on her statement 2 months ago in October. That's when it should have hit.
Yeah,
It's a W-2, not self-employment. Yeah,
yeah. I
okay.
mean, that's when most people saw the recalculation of the benefit. So if she hasn't heard anything, I'd just take the tax information in the W-2, or if she's self-employed, she'll need her Schedule SE in her tax return, and just ask them to include it, and then they'll do that, and it'll be effective with January of 2023, regardless of when they do it.
Oh, okay.
Does that answer your question, Richard? I'll assume it does. Okay, great. Jim, any questions you've received you'd like to talk about? Wait, before you do that, Eric says his case, the couple, they're not divorced. So Jim, why would they be asking for what type of he's asking what type of information or documents are should they provide?
Well, technically, if they're filing at the same time, I mean, they may have them. There's a form that you can fill out. You fill out your application, and your spouse files an SSA-3 at the certification of marriage. So if you're willing to admit you're married, they take your word for it. Worst case scenario, they want to see your marriage certificate. So unless it's, say, maybe something like common law, where they have to develop that to see were you actually common law married under the state rules and regulations. In that case, they'll ask for other documentation. But if they were ceremonially married, I mean, that's all they should need. Worst case scenario, marriage certificate, or they'll just compare both of their applications, or if one's filing and the other one isn't, the SSA-3. So I don't know. That's a little strange.
We have less than a minute to go. Richard, do you have a quick final comment on what you wanted to ask about? Okay, Jeffrey, you're on. You'll be the last one.
Okay, yeah. Just on the WEP and GPO again, when I look at some of our clients and I'm trying to determine, I use a software to put that into to kind of estimate what the the best time to turn on their benefits are. When I'm looking at whether or not that applies, what is the best way to do that? Because I'm in Texas, and I know there's like federal and state government employees, and not all of them pay into the system, but some of them do pay Social Security, and it doesn't apply. Is the best way to just look at their Social Security statement to see whether they've paid in or not?
Well, yeah, you can look at their statement and see what's on there. Federal employees, were they hired before January of '84? If they were, they're probably civil service. They could be the new one, the federal employees retirement, because some folks were given the opportunity to opt into it. But if they were hired January 1st of '84, they paid into Social Security, your federal folks. The ones that didn't, you can tell because look at their statement, it'll show zero earnings and it'll show Medicare earnings. So you'll know right there that they had a job where they didn't pay the Social Security tax. They just paid the Medicare portion. The state folks, your state teachers and stuff, I just ask them and then look at their record. That's the best way. And, even if you're eligible for windfall, if you paid 30 years or more substantial Social Security covered earnings, windfall doesn't apply because you're back to 90% of that first bin point.
Hey, Jim, this is Rob. I just posted a recent article for WEP and GPO for those who may be interested in it and seeing it. It's a link.
Okay, is it in the chat?
Yes.
Okay, there you go.
It's about 3 or 4 up.
I saw that. That was interesting.
Okay.
That answers my question. Thank you.
All right, folks, that ends today's open forum. I believe we have another one scheduled 2 weeks from today. Don't quote me, but I believe it is. Until next time, take care, everybody. Thank you, Jim. Glad you were here.
Yep. Sorry for being late.
Bye, everybody.
Bye.